So is value investing really dead? In our previous video, we spoke about how value investing got started when Professor Benjamin Graham, or rather the father of value investing, focused on searching for companies at a really cheap price. In this video, we'll talk about how value investing has evolved from looking for cheap companies to good companies and buy it at a really cheap price. When Buffett started work with Graham Newman Corporation, G.N.C, he analyzed stocks differently. In G.N.C, analysis of a business intrinsic value relied heavily on the balance sheets. Graham did not think too hard about what differentiates a good business from a bad business. To Graham, so long as the stock was statistically cheap enough, it will usually be considered a candidate for investment in a widely diversified portfolio of stocks numbering in the hundreds. Graham's methods worked and his investment firm was very successful, but Buffett's thoughts about investing had started to diverge a little. Buffett left Graham's firm in 1956 and started his own investment partnerships. He started out using Graham's method and was very successful, but eventually Buffett would start investing in a way that people would closely associate him with in modern times, which is investing in great businesses that can earn great returns on capital over the long term. That would be a development that would take the introduction of two very important people, Charlie Munger and Philip Fisher, who will really reshape the way Buffett thought about investing. But before we introduce Charlie Munger and Philip Fisher, let's go all the way back to 1954 when Buffett started work in G.N.C. In G.N.C, Buffett met Walter Schloss, who would quit Graham's firm in 1955 to set up his own investment partnership. While Buffett will always be the ultimate poster boy for modern value investing, Walter Schloss is nonetheless a very important figure, the one true torchbearer for Graham, who still uses the traditional way of value investing, which is looking for cheap companies. Walter Schloss was about 10 years older than Buffett when they first met as colleagues in G.N.C. Buffett was the golden boy at the firm, favored by Graham and other important partners in G.N.C, while Walter Schloss was treated as a normal employee. But Walter Schloss took Graham's lesson to heart. When he set up his own investment partnership in 1955, he used what he had learned from Graham in his investment activities and never wavered all the way until his retirement in 2001. For 46 years, Walter Schloss walked the talk by investing the Benjamin Graham way, focusing on the balance sheets and trying to buy companies that were selling below their working capital. His earliest investors have to thank their lucky stars, for Walter Schloss grew every single dollar entrusted to him into $662 by the time he retired, more than 30 times the returns from the overall stock market. Wow, look at this. While the whole world was watching Buffett investing in companies like Coke, See's Candy, and American Express, Walter Schloss was happily buying stocks that were selling for less than all their net assets. As communication technology improved over the years, information flowed at such a fast rate, and Walter Schloss found that Graham's famous net investing opportunities were beginning to dry up. So Walter Schloss modified it a little by investing in companies that were selling below their total net worth. Even as the internet era arrived, Schloss still managed to profit handsomely by applying Graham's investing methods. Using this method, Walter Schloss generated a great returns of 20% per year for 47 years, which is 15.3% net to his investors, which doubled the 7% return of the S&P 500 during that period. For those who say that value investing is dead, we have to see if these people have a track record that is far superior than that of Walter Schloss. In my next video, we shall find out how Buffett fused Graham's lesson with the ideas of two other very important people, predominantly Charlie Munger and Philip Fisher, into the modern value investing philosophy that we know that is alive today. So is value investing really dead? Please help to click like and subscribe to our VA channel to learn more about value investing. I shall see you soon.